Managing your cash flow correctly to buy more inventory to fill your FBA might be the trickiest part of selling on Amazon. How can you do it in a way that you make sure that you get the most out of it? Here's why we have a special guest to explain us a little bit more about how to manage your cash flow, increasing your ROI. Here's where we are, and here with me is Nadav. Nadav has founded, managed, and sold Israel's largest cloud services company, GNS. Ever since Nadav made the delivery transition to e-commerce and embarked on his journey as an e-commerce seller. He effectively managed 3 brands, acquiring valuable first-hand experience in tackling and overcoming industry challenges. And currently, Nadav is fully dedicated to his role as a leader at CapEc. Before we dive deeper into today's topic, we want to give a big shout out to Jungle Scout, our newest partner. They provide the best tools to do market research and data analysis for Amazon sellers. Their platform includes review automation with advanced features, keyword ranking tracking, PPC analysis, AI assistant, and many more. So whether you're just starting out on your Amazon seller journey or you're an already established seller, Jungle Scout is a platform you must have to scale and grow your business. Get the best deal on Jungle Scout by clicking on the link in the description or bio. Also, subscribe to our channel so you keep updated on the exclusive offers and discounts we're preparing for you. Hi Nadav, welcome to Share It Studio Mastery Show. Really appreciate for you being here.
Hi Andrew, thanks for having me. I'm very glad to be here.
So Nadav, when you want, we can start. If you want, you can present your screen or...
Sure. Let me present it. First of all, a little bit about me. Like you said, I've been in the e-commerce space for 10 years. I've created multiple brands, 7 figures, still manage them today. And I've been dealing with CapEc in the past 3 years. This is to create a great solution for the growth of Amazon sellers in order to really grow their business with a steady and stable cash flow. At the end of the day, when we're sellers, we're investing our capital, our money in our business. I mean, any entrepreneur is investing time, money in his business, and he wants to make money back. I mean, we're all in this to make money. We want to create brands, products, and at the end of the day, make a profit or an income, something we can live on and grow our business. So it's very important when managing your business, understanding your cash flow and planning it correctly, because cash flow is the most important thing in a business. I'm sure all sellers here have had situations where they've created a purchase order, it's ready, they don't have enough money to pay the balance for it to be shipped out. Or even they have expenses this month to pay their employees and they might have not gotten enough cash from their disbursements or from Amazon in order to pay this. So dealing with cash flow is something that is extremely important, and you need to fully understand all the different expenses that you have in your business and when you have to pay these expenses. If you're familiar with everything, then you can plan a good cash flow. And when you have a steady cash flow, you're a lot more less stressful. You can concentrate on growth. You can concentrate on positive things and not have to put out fires all the time or be stressful or not sleep well at night. So it's very, very important to understand your cash flow, your expenses, and to build it the right way. When we're dealing with selling product, especially private label sellers, we're manufacturers basically. So we have a very unique time flow to our ROI. What does that mean? I'm sure most of you are familiar with this time frame. You place an order with your supplier, you have to deposit 30% on the day you place that order. Then hopefully a month or month and a half later, your product's ready, you have to pay the balance of 70%. Then while the product is being shipped, you have to pay the remaining product to ship it in order for it to arrive in the US, including customs and any expenses you have there. Then it goes into the Amazon warehouses and we start selling it. Hopefully, you didn't buy too much product and you're able to sell that product within 3 to 6 months. So, in total, you're talking about 6 to 9 months ROI. What is ROI? ROI is our return on investment. When we put money in the bank in a CD, our return on investment is the interest we're going to get on that money. Our return on investment is how much we get back from investing our money. So when we're buying product, we're basically investing our money in this product in order to create profit and to create a return on that investment. Most private label sellers should be making anywhere between 70 to 100% ROI on their cost of goods. Meaning if they bought a product for $10, they should be getting a net profit of between $7 to $10 on that. Just to go into that very shortly, if you do the calculations, you buy a product for $10, usually you sell it anywhere around $35 to $40, and your profit is usually 20% margin from the top after Amazon took all of its costs and advertising and logistics and whatever you had in it. So you're making anywhere between $7 to $10 on that same $10 that you invested. Okay, that's how it's calculated in a short way. But the time frame of that is 6 to 9 months. So we're making 70 to 100% every 6 to 9 months on our capital. But if you're a seller that's growing and you made a purchase of 5,000 units and you sold them, most likely you're going to have to make a purchase now of 10,000 or 15,000 units already in the middle of the way while your first order is being sold in Amazon. So in any given time, as sellers, we have at least 2 to 3 purchase orders in parallel that we have to pay for and finance while we're growing. And from purchase order to purchase order, hopefully we're growing, so we have to buy more and more product. Therefore, even if we're making 70 to 100% at the end of 9 months, that means we can at best double our investment every year. Where if we want to keep our steady growth and if we want to meet up with demand, we're going to have to triple and quadruple every year, which means you have to bring a lot more capital in. So either you're going to invest more and more of your own capital and grow, or you're going to use external capital. So when using external capital, you can increase your inventory growth and mitigate the risk a lot of times, because when you're using external capital, depends what type of funding you're taking. You could even get non-secured loans where you're not personal guaranteed. The collateral is only the inventory, and in those situations, basically you have less risk, so you're helping the risk. Plus, when you're getting financing, it enables you to grow your business faster, get a lot more inventory, and not stock out of inventory. The important thing is using the right type of financing that really connects to your cash flow and your ROI. Because as we explained, the cash flow for inventory purchases for private label sellers that are manufacturing is very unique. As if we go back and we remember this timetable, we need 30% day one, then 70%, then the shipping, and only then we start selling off the product. So if we took any conventional financing, like there was Amazon lending, they're not doing it now, but even a bank, you go to the bank, you ask for a loan, it'll take them 30 to 60 days maybe to approve you. Once they approve you, they give you, let's say, the money here day one. And they might give you a 6-12 month loan period. you're starting to pay back that loan basically already from next month. Also, most revenue financing solutions out there are giving you funding for your revenue. They see that you're selling $100,000 a month. They'll give you $100,000 for the next 6 months. You get it today, but then they start taking it off already every month. So if we're manufacturing and we got the money now, $100,000, by the time we started selling the first unit, which is usually about 3 months, we've already, if it was a 6-month loan, we already paid back half the loan and we haven't even gotten any ROI. So that means we're going to find ourselves at huge cash flow restraints because we invested this money in inventory. We haven't gotten any of that money back yet because it hasn't started selling, and we're already repaying a loan. So in those situations, most of these finance solutions that are out there, when it comes to inventory specifically, they don't align with your cash flow and your ROI, and therefore they're, for one, not going to be effective. So they're not going to really give you the growth you need and the extra capital you need. Second of all, they're going to end up costing you a lot more because of their inefficiency. And third of all, when they don't connect to the ROI, they're going to create huge cash flow restraints on your business, making your business work making your stress go up and making your business be less efficient and stable. So it's important to find the right kind of financing. If you're doing advertising, then that's a 30-day financing basically. You advertise today, you make a sale, you get your money back within 30 days. That's a simple way to look at financing. But when you're doing inventory, you want something that actually connects directly with your cash flow and your ROI. And that's the unique solution that CapEc created in order to give you that ability. We look at financing in a different way. We look at it as partnering with you on your purchase order. So we're creating added capital for the expansion of your inventory, plus mitigating the risk. The way we look at it is you're a steady seller. You've been selling well for over a year. Your product sells for 6 months. You have steady growth, and you basically just need to bring more inventory now to make that growth continue and to create more profits, more revenue, and more sales. Our experience from selling on Amazon for over 10 years, we took all our data and knowledge and experience and are able to look at our sellers and understand where there is risk, where there is not, who has very good potential of growing their business and succeeding. And in that way, we come and we partner with our sellers in a way that we basically will pay for up to 75% of the inventory that needs to be purchased for the store. The only collateral we take is that inventory because we're partners on that PO. And then we take a steady fee on the profits that will come from selling that product. As I mentioned before, if a seller makes 70 to 100%, our average fee is probably around 10%. Then the seller is still making 60 to 90% on the finances on the amount of inventory that we financed. This allows him to quadruple his inventory because we're up to 75%. We pay for it, but so his investment now is only 25%. So a PO of $100,000, you only put down $25,000. We put down the $75,000, and then when you make that money back, you're gonna make basically $70,000 to $100,000 on that PO. Our fees on the $75,000 might be $7,500 or maybe a little bit more, meaning you're still gonna make almost $60,000 on $25,000 that you invested. So now your ROI went up from 70% to over 300%. This is how you can improve your ROI and lower your risk because you have less money involved in the deal, you have less risk, you're getting a lot more return on investment on your capital, and you're able to bring as much inventory as you want when partnering with us because we're paying for that inventory. And how do we do this? That also creates the better cash flow is that we connect directly with the return on investment, with the cash flow of that specific PO. So we'll pay the manufacturing when they need to be paid. We'll pay the shipping when they need to be paid, and we'll create the repayments to match the sales rate of the product. Basically, only once you start selling the product and at the rate that you sell it, then you only start paying back for that product. So you know that no matter how much inventory you bought or how much financing you used with us, you won't have to worry about bad cash flow. You won't have to worry about paying back before you actually made a return on investment. And this makes you have very steady cash flow, and you can really clear your head and concentrate on growth and positive things in your business and not have to worry about the problematic cash flow that restraints that a lot of other businesses have. I mean, inventory is 80 to 90% of our tied up capital when it comes to Amazon. So if you're able to steady your cash flow on 80 to 90% of your investments and your capital, then all the rest will be much easier and you can really grow your business fast and safe. This is how we work. This is our hack, and we'd be very glad to help any of our sellers. Basically, when you file for an application with us, you also get sort of an audit because we go and audit your store and your product, your profitability. We check everything about your product because we're taking the most of the risk here. When we when we finance you and purchase with you inventory, we're basically 70% of the risk. If you're not able to sell that product, we're never gonna get our money back. So we're partners in that way. We're very smart and able to look at everything in your store to make sure that your product is a good product and that you're working the right way. We also have our best practices to help you create strong chain of logistics and steady inventory management. And with that, also as partners, of course, if something happens, if your listing gets closed or if you have a problem in your store, we're going to be there to help, because if we don't solve it with you, again, we're probably not going to get our money back. So you're getting a partner, you're lowering your risk, you're improving and steadying your cash flow, you're creating almost unlimited inventory for growth so that you can get to your true growth potential of your business, and you're improving your ROI on your investment. That's what we're here for. We're very glad to help.
Thank you, Nadav. I do have some questions that some Amazon sellers may be wondering. First, what is the process for applying for funding?
So it's very simple. You apply for it just by clicking the link or going to our website. You can fill out an application, and we'd be glad also to set up a call with one of our sales managers and to go through the process. But you can get from us a price offer usually within 48 hours once you connected your store to our API so that we can pull the data and do the underwriting check of your product.
Great. So it lasts approximately 24 hours, right?
For a price offer for 24 to 48 hours, yes.
Okay, great. You talk about the part of the interest rate, that it is not that you charge an interest rate, but rather a flat fee. What would be the difference between, because I understand that you set a flat fee and that you can distribute it throughout the payments, right? What would be the difference between an interest rate and your flat fee?
You can't really connect the two because it's a profit share. The timelines are very, very different. Therefore, it's not exactly a direct connection. But like I said, on average, a deal that would take almost 9 months, 6 months of sale, 4 months of sales, the time to ship it, all that is usually around 10%. So it's not far from the from the financing charges of other companies that are out there. But the uniqueness of the cash flow and the uniqueness of the risk management split between our us and our clients gives a huge added value that doesn't really matter if it's a percent more or less, because you're going to be able to make so much more ROI at a steady cash flow.
Yes, I understand. And what happens if, for example, someone cannot pay your fees or the payment on time?
So we connect the payment to the sales. So basically, if there were sales, product was sold, obviously it has to be paid. If there's a problem and sales go down, then we can reschedule the payment so it'll connect to the new sales rate and postpone it if needed. And if you aren't able to sell the product and there's a problem, or you ended up closing your store, then basically we'll take over that product and sell it through our stores just to get back the money that was invested.
Do you also fund for, let's say, that, I mean, the inventory is good for an Amazon seller, but he also wants to invest in other things, such as, for example, the listing optimization or the ads? Do you do that type of investment too?
No, so we concentrate only on inventory. We want to be the best we can on that, because inventory at the end of the day is 80 to 90% of your capital. So at the moment, you always have a certain amount of inventory, $100,000, let's say. If you start financing with us, you're basically going to free up 70%, 75% of that. So that will free up $70,000 that you can invest now in improving listings, doing more advertising, even creating new products or going into new markets. So once we take care of the main amount of the investment, that's always going to allow you to have more capital for other things.
Great. I think this is a very good opportunity for all Amazon sellers who are watching us right now, and definitely at least, reach out to Nadav, to his team, book a call with them and see, how they can help you. At least maybe you don't need it today, but maybe once you will. So it's better to have it than not. And Nadav, thank you very much for all your advice here. And yeah, see you in probably a next video talking about the best practices you talked about. So yeah,
That'd be
great.
great.
Bye.
Thank you, Andrew. Bye.